Hi, this is Peter from GameOfTrades.net. Welcome back to the channel. We have so many things to cover on the charts today. Just over the past few days, we've had crazy price action on the markets, especially on the NASDAQ 100. So we're going to be covering all that in this video. Now, it has been a few days since our last video. I was away from my desk. for the majority of last week, but we are back on that normal schedule, both on the website on GameOfTrades.net and on the YouTube. So we will be posting regularly. Now, without further ado, let's get right into it. This is the chart that we talked about in the last YouTube video that I posted, right? We talked about the similarities between what's happening right now in 2020 and 2021 and what was happening back in 1999. This is something that we've covered many times on this channel. And so in the last video, we were starting to break out above this secondary channel, very similar to what happened here back in 1999 that led to that big blow off top. So we're going to talk about that in this video, and we're going to discuss if anything has changed in that technical picture over the past few days, because we did have a couple of red days. So we're going to dig deep into the charts. We're going to go into the futures chart, where we can take a look at that channel in detail and see where we're at on the 8-hour chart. So this is what's been happening over the past few days. We had that nice big move through that resistance level. That was a beautiful breakout on the NASDAQ 100. We started seeing the FANG stocks move at the same time. So this was some bullish price action, but then the NASDAQ failed that breakout and snapped back straight above. So what does that all mean? Does it change anything what we covered in the last video? And that's what I talked about in the last premium episode. The NASDAQ 100 was trading around right here, just under that resistance. It was backtesting that line of resistance. And I said, if it pops back above, then what does that look like? It looks like this is actually a whipsaw signal. And this is a false breakdown, and that's extremely bullish. So that's what that looks like right now. This can be what you call a stop loss raid, right? You have a breakout, and then they dump the markets to hit the stop losses, get a better price, and then actually pump and get that proper breakout for a sustained rally. So the technical picture on the NASDAQ 100 is looking pretty good. It's looking bullish. It held that strong line of support right here, and now it's back above its price channel resistance, and it has very little resistance above. And the reason why I'm focusing on the NASDAQ 100 instead of the S&P 500 like I usually do is because we believe it's going to be all about the FANG stocks if we get a big rally on equities. And that's going to be the area to take the most profit out of the markets. Remember what happened from the March low all the way to the September high. The FANG stocks were rallying like crazy. It was all about the FANG stocks. And that narrative has calmed down a lot over the past few months. But again, if we take a look at what's happening on Amazon, right? We had that massive rally from the March low all the way to the September high. And then we have a beautiful consolidation pattern right here. And now it's starting to break out. If we actually see a strong, sustained breakout on Amazon and the rest of the FANG stocks, it's going to push the tech sector much higher. So we are waiting for that confirmation on Amazon, but I am going to show you a chart that pretty much says it all on Amazon, and that is the ratio between Amazon and the NASDAQ 100, right? So we divide Amazon by the NASDAQ 100, and you get this chart. And this is a chart that we often use to trade particular stocks, because it lets you capture those moments where Amazon begins to outperform the markets. And that tends to be the moment where the FANG stocks all start to rally at the same time. You can see that breakout, 2015, massive outperformance on Amazon. Then you had an underperformance right here, then another breakout. And what's happening right now? Breakout. So we'll see if this holds. We'll see what that looks like in a couple days. And if that is accompanied with an actual breakout on Amazon on that triangle pattern that we talked about. But this is looking extremely bullish for Amazon. And if Amazon is looking bullish, then the NASDAQ 100 is looking bullish. And we want to get some exposure to that. By the way, make sure to drop a like on this video if you're enjoying it, if you're learning something new. It does help out the channel a lot, so it's really appreciated. Now we're talking about all this from a trading standpoint, right? We're trading the stock market, we're trading equities, but we're not investing in the stock market. That's too risky for us. We've made multiple videos on why the stock market is overvalued, it's over-leveraged, why it's coming towards the end of its market cycle, and we do not expect it to continue outperforming the way it has over the next few years, right? The past performance does not determine future performance, and that's really important to understand. If you're interested in our investment strategies, where we have a huge focus on gold, on silver, that's been absolutely exploding lately, so that's very good for us. We have investments on platinum. We're closely looking at emerging markets and of course cryptocurrencies that are currently, as I'm making this video, breaking out. So again, if you're interested in investments outside the stock market, make sure to go check out gameoftrades.net. But from a trading standpoint, this is looking extremely bullish. And as long as the markets have that bullish structure, that bullish bias, we're going to be looking for long opportunities and we're going to be looking for higher highs in the short term. And we're very comfortable with that because we're able to manage our risk properly on those trades. So really, as I'm making this video, the NASDAQ 100 is continuing to power on. This is probably not the best entry for the NASDAQ 100. What you're looking for is maybe a back test of this level. That would be a nice entry right here. Not sure we'll get that though, but if you can get that type of trade and set a stop loss just below, that is an objective entry on the NASDAQ 100. Now, everything I'm saying right now is extremely bullish, right? So although the technical picture on the NASDAQ 100 is extremely bullish, we have to look at what the risks are, right? If you're serious about trading, you have to take into account the risk just as much as the reward. And to take a look at that properly, we need to look at the US dollar index, DXY, that's currently breaking out, right? So we have the daily chart here. We've been talking about this for quite a while. We had that massive wedge pattern right here with big divergence on the MACD, right? You see the price going lower and lower, and you have the MACD make a higher low. So that tells you that momentum to the downside is waning and that we're likely to get some type of a reversal, and a breakout above this line could be that fuel to have a sustained rally on the dollar. We'll dig into the 8-hour chart right here, and you can see what's happening right now. We have a low, a higher low, a high, and we've just taken out that high, so we have a higher high. So what do we have? We have an uptrend on the US dollar as it's breaking out. The next big target is the 92 level, corresponding to those lows right here. So that will be a nice area of resistance. And as I was discussing with the members of the site, even if you have that wedge pattern, even if you have that strong divergence and that breakout, you have to remember the power and the magnitude of the bearish trend that we've had on the dollar, right? So the 92 level here will have a bearish bias when we get here, and we'll be looking for a rejection off that level. That's the bias we'll have if the dollar gets here. If it actually manages to break out above this, then we're looking for much higher highs on the US dollar, because that would be extremely bullish. But we're not there yet. We're going to see what happens on the dollar over the next few days, but that could put some pressure on the stock market. If you've been following us, you'll know that the single biggest driving factor for the stock market in 2020 has been the weak dollar, right? They have an inverse relationship, and that relationship has been perfect for the past few months. Again, I'm going to show you that relationship by putting the S&P 500 on top of this chart, and you'll see, right? Each major top on the dollar is a major bottom on the stock market, and vice versa. Major top on the stock market is a major bottom on the dollar. We're not going to go through all that, but if we see that breakout sustain and we see a big rally on the dollar, could that put some more pressure on the S&P 500? Absolutely. And that's why we're not taking too aggressive positions, because we do have that risk that US dollar risk, telling us that investors are finding the dollar quite attractive at these levels and that perhaps demand is switching back from the stock market to the US dollar. So that is definitely a risk that you need to take into account if you're taking long positions in equities. So that's about all I wanted to cover in this video. If you enjoyed, make sure to drop a like and subscribe to the channel if you haven't already. In the meantime, good luck on your trading and see you next time.
So, you want to invest in the cryptocurrency market, but you don't know where to start? Welcome to the Covesting module on PrimeXBT. The Covesting module helps investors and talented cryptocurrency traders find each other. With an easy-to-use interface, you can compare and replicate successful strategies with a proven track record. You can follow multiple trading strategies to diversify your risk. Covesting module on PrimeXBT. They trade, you profit.